In today's video, I'm going to share with you my opinion on what I think the most important thing to know in trading is. Hey guys, Kill Stokes here. Welcome back to another video. This week, we're going to do something a little bit different. Typically in these videos, I'm sharing with you a portion of a bigger video that I do for the Tier 1 members, really providing an outlook on what's on my radar for the week to come, and of course, giving you some educational tidbits as well. Today, I wanted to share with you some live footage from our live trading room because I think it covered a very valuable lesson, and that lesson is, what is the most important thing that any trader needs to know? And when I say any trader, I mean whether you're looking to be a buyer or looking to be a seller. Something that I've been teaching for a long time and I've been trading for even longer. And between my own personal journey and between the stories that I hear from traders that I'm actively working with, one of the biggest obstacles that we face is that traders kind of learn backwards, right? The idea is to make profit, and sure, that's the idea for all of us, but the idea is to make profit, and many newer traders think the quickest way to make profit is to learn a strategy. So they start learning a strategy, they start trading it blindly, but they don't actually know how to trade. And typically what happens is they run into trouble, they lose money, and many of them quit. Some of them kind of restart and go about things the right way. But for those who go about things the right way, when they start learning how to trade, they start with the wrong mindset. They start learning how to be a trend trader or learning how to be a counter trend trader, where in reality, it's all kind of the same. And I wish we could get rid of this terminology. I understand we can't. We have to describe what we're doing somehow. But in my opinion, it's not about being a trend trader. It's not about being a counter trend trader. What matters most and what every trader needs to know is how to do proper analysis, because whether you're a bull, whether you're a bear, whether you're a trend trader, whether you're a counter trend trader, the analysis is all the same. The only difference is how you go about using it. And I know if that concept doesn't make sense for you guys that are on a Tier 1 platform, just make sure you check out the Foundation Course 2.0. That's the course that we put together purposely to try and explain this. For you guys on YouTube, I actually shared, I think, the first 3 or 4 videos from that course. Just YouTube search Akil Stokes and look for the video that says Bridging the Gap, and you can kind of check that out as well if you're a little confused with just what I mean by this. But anyway, the clip that I'm about to show you shares some footage of the conversation we had in the live room about this subject, and hopefully it helps push you along the path of becoming a better trader. Now, before we get into it, you know what I'm going to ask already. Do me a few things to support this channel. Trying to get to 50,000 subscribers. I don't have any reason to get there, but 50,000 is a cool psychological number, so I'm going for it. And to help me do that, hit that like button. Leave me a comment below and make sure you share this on social media. Also, Tier 1 members, I have a cool idea that I want to run by you, so make sure you watch the entirety of the video. After we're done kind of looking at the trading opportunity, I want to run an idea from you or by you and kind of get your opinion. So anyway, let's hit the video, check it out, and I'll see you guys later. All right, so Euro Aussie, if you guys remember, big break to the upside here. We had a bat pattern. Looks like you guys have finally gotten your targets on the bull bat. Hallelujah. Take care, Div Deep. It also doesn't count if you shower. Oh, I'm good. Gotta shower, man. Only time I'm flexible. But yeah, congrats for you guys that took the bull bat. Well done. Target 1's achieved. Working up till target 2's, looking at 64.50s. See if you can get a nice little rally. Patience pays off, right? Gave you a little bit of pain, but it never even challenged your stop loss. So if you're in this and you held tight, congrats. If you bailed out, shame on you. Look at this every day and feel bad about yourself. Seriously. That's what happens when you break your rules. Let's go down to the 4-hour chart here. And you can see we had a head and shoulders earlier in the week here. We got our pop off of it, and we're looking to make our way to our next VS1 level, which is sitting here right above the 163 psychological number, which, by no coincidence, I'm sure, price has stalled. Price has stalled. So 2 things that you could look at in this situation, right? Let's put it this way. If you are a trader looking to involve yourself in a bullish move, What do you think you could be looking for perhaps? Some type of pullback, a little bit of relief. Yeah. Again, you can see, we'll see this as the rising channel once we get down to the lower time frame. But you can see here on the 4 hour, high momentum bullish candle, which kind of work backwards for our next three. High momentum bullish candle, higher momentum bullish candle, doji candle, weaker doji candle, and even smaller candle right now. So again, what do the sizes of the candles show us? Right? We're seeing the loss of momentum, slowing down, slowing down, slowing down. As we come into that psychological number, as we come into that previous level of structure, as we come into that 50% retracement, he's so good, right? Now, if you're someone looking to get short, what are you looking for? Buyers are waiting for a pullback and a chance, the next opportunity to get long. Sellers are probably looking for what? Some type of reversal at this level, correct? Some type of reversal at this level. Now, if you are a potential buyer, right? You're probably asking yourself, well, where does price need to pull back to in order to get long? Where would you guys think? Last says 161.50s. Let's shoot some ideas in as usual, and then we'll discuss. Again, don't be shy. Don't worry about this. Isn't your trading forum. If you shoot in an idea, people are going to laugh at you. No. It's great to get different ideas because it gives different perspectives. And whenever we do this exercise, someone's like, huh, you know what? I never thought about that. Huh. And you learn something. Greg says above 164s. Above 164s. All right, that's a different question. Greg says, Naomi says 161.40s, Greg? A pullback? 164? 161.40s? Greg said, or not, sorry, Naomi says between 161.50s and 160.50s. So Naomi's looking in this area. Yeah, I would say slightly higher. I would say my starting point would be probably right around here. Right, you see this little bit of consolidation before our markup or our break to the upside. I'd start my zone right about here, about 161.85s. This would be kind of the first area right here I'd look for, 161.85s to about, what is this, 161.25s. And obviously, if you want, again, we can add some confluence to that. We can look for some Fibonacci confluence, or we can add our Fibonacci retracement to it and looking for some Fibonacci confluence. So swing low to swing high right here. Do you have any fibs that line up in that zone of yours? There's a 382 in mine. Here's the 50%, I think a 618 in the bigger one, the one that Naomi drew out. We can draw a small fib as well. Swing low to swing high. A little bit of confluence in there. I have a 382 lining up with a 50%. 618 right at the lows. And you're not really gonna get too much confluence in here just because I guess the 786 and the 618 are important. The 886 is not too important. The 50% is a little bit far away. So what you've done as a trader that's looking to get long is you've identified the spot where you want to get long at, right? Would you guys all agree? This would be cool, right? We don't, I haven't done a live event in a while, but this would be one where I take the room and I split them in half. I say, if you're looking to get long, get on that side. Looking to get short, get on that side. And let's make the argument, right? Bulls versus bears, right? So, we did it with entry already. Next question is, okay, so we did the bulls, right? The bulls. If you're looking to get long, where are you looking to get long at? Now, for my bears, if you're looking to get short, where are you looking to get short to? Some of you guys see where I'm going already. Some of you about to have your minds explode. See a few people typing in. We'll give them some seconds. Precious seconds. Levi says, hey, Levi, 161.40s. Raymond says above that structure you pointed out. Here's the thing, right? The same level that you predicted, the same level that you identified where you'd want to get long at, that's the same level you would want to get short too. Why would it be any different? Unless you're using a very specific rule, obviously. But as a buyer, if you're expecting the selling pressure to dry up here and the buying pressure to re-engage here, and obviously that's the reason you're looking to get long in this area, if you're a seller, would that not be the same area you're looking to get out? The same area where you expect the selling pressure to dry and the buying pressure to re-engage? It's the same thing. And this is what I've been trying to tell traders for years, right? Analysis is analysis. I don't care about your label. I'm always a bull. I'm always a bear. I'm bearish this pair, bullish that pair, trend continuation, counter trend trading, right? That's cool. That's necessary. You need to identify what type of trader you are. And obviously you fix and create your plan around that. But the point is, we're all doing the same analysis. We're just doing it for different reasons. We approach this thing two different ways. Did the analysis change at all? Not at all. The only difference is we're one party, right? One half of the room. They were looking at it as a level, this is where I'm going to get long at. Yeah, if we pull back to this level, then this is where I'm going to start looking for opportunities. So they're looking back saying, okay, I'm going to wait till we get to this level, and that's where I'm going to jump on. The other party is saying, okay, I'm selling right now, right? I'm short, I'm counter trend. But once we get to this level, this is where I want to get out the market, because this is where I expect those guys on the other side of the room, I know they're going to be interested right here. Yeah, they think they're going to get some of my profits. I'm taking my money out right there. And then little do they know, it's all helping each other, right? Because if you are selling and you're taking your profits out, what are you doing? You're buying. And if you're a buyer and you want the market to rally up, what do you need? You need more buying pressure. So they're helping you and everyone wins. Now, obviously some people lose. A lot of people lose. But from your perspective as an educated trader, you guys win. And it really works together seamlessly like that. Now, obviously, there's no guarantee that that spot holds, right? You could be a seller and price can rally lower and could be a bigger trend continuation trade back down to the downside where that bat originally formed at. And then as a seller, you're not really missing out on profit if you took it where you're supposed to, but you could have maybe misjudged the length of the move. And as a buyer, maybe you either never got your reason or maybe you did get your reason and it failed on you. That's trading. But the point is, the analysis is the same. And that's what I want you guys to understand, especially when we did that foundation course 2.0, is that, yeah, we have these labels, we have these terms, it's all good. But at the end of the day, the analysis is what matters most. If you can analyze the market, you can trade whatever way you want. Because it all complements each other. And I hope that point got across. So, talked about the slowing of momentum, right? Momo candle, high Momo candle, doji candle, smaller doji candle. Who knows what we're doing right now? We go down to the lower time frame, the 60. What are we noticing here on the 60, right? We're building our case. I know we haven't technically walked through the IPD, but we're building our case. What do we notice here on the 60? Talked about this earlier. What are we forming here? Greg says, but one side will be stronger than the other. Not necessarily. You would hope that's the way the market would move. I mean, both sides could be even and the market can just kind of go sideways. But you would hope one side is stronger than the other. That way the market actually moves, because you need movement. If you don't get movement, then if everyone agreed on price, then it'll stay the same. But remember, when we talk about one side being stronger than the other, again, just because we see buying pressure doesn't mean the sellers are losing. And as in that example, buying pressure can mean that those buy orders, or a bulk of those buy orders, are coming in from the sellers taking profit. So they're winning. And those buy orders aren't necessarily against them. It's them saying, give me my money, right? So it's not necessarily a lose-lose situation, right? But yeah, rising channel here. That's a sign of potential relief. You can look at the RSI. RSI is extremely overbought. We did have RSI divergence on there. We did have a lower low, lower close at the top. This could be your first strike entry into getting involved. Obviously, what we can do now, that move has already been made. What you can look for now is obviously, if you want to see a break and close of, say, the trend line, look for the lower low, lower close right there of the trend line, or we go down to the higher or the lower time frames, and then we look for some type of pullback in anticipation of a move back down to this level. Sanel says, and I hope I'm not butchering your name. If I am, please, I apologize. I'm short 60 minute. Stops at 162.48. Stops at 162.48. Stop 163.48. So 162.48 is below where we're at. So I'm assuming 163.48. Oh, perfect. I got a name right. Yeah. Yeah. All right. But yeah, so now we're short. Stops at probably 163.48. I think that meant to say. Nice. See if we can get a continuation. For you guys that are looking to get short, let's head down to the 15er. And again, this is one we've been talking a lot about trend lines here. I don't want to say debating, but discussing. But if you're using a nice little trend line right here, you have your break. Treat this the same way you would use your horizontal support and resistance. Where wait for that pullback. Look for that opportunity to trade it down. Now, I would say this on a lower time frame. There may be another sneaky level you may want to pay attention to. We have a 618 Fibonacci retracement right here. We see an important level right here. What else do you guys notice around this level? 618, which is the golden mean, right? Fibonacci retracement. You've got the brief consolidation before a big bull breakout, which we always look at those levels as being important. And you got another psychological number of 162 even, right? So perhaps instead of saying, hey, I'm going to shoot for 161.82s, perhaps you say, you know, I'm willing to be, 18 pips? I'm willing to give up 18 pips for the safety of, or 20 pips, whatever, of the for the safety of being a little bit higher. That's something I would highly consider. I don't think it's, especially if you're getting involved up here. Like, let's say you get involved in a retest and you're up here and you're looking at a profit target of that. Your risk is up here, right? Somewhere. Measure out your ATR and whatnot, just from example purposes, right? Is it worth being, is it worth giving up this much profit for a little bit more safety? What would you guys say? I think it is. This is a part of trading we don't have an official name for it. I like to call it just don't be stupid. And this is from years and years of myself being stupid and stubborn, which was not a bad thing, right? I was stubborn in the market because I was really, really bad with following rules. So I went to the extreme of being extremely bad with following rules to extremely rules-based. And no adjustments, no room for freedom. And I think that's how many traders should start. You should be extremely stubborn, extremely rules-based until you gain experience, until you gain intuition, which in my opinion, intuition is just experience. And then you can allow yourself to have more flexibility. And that means, and flexibility could be rules-based. You can change your rules. Obviously, you could say, if price action is blank amount of pips below even handle number, then I adjust to even handle number if you want to make it rules-based. But I think this is just being smart as a trader, right? If you know a level is important, don't put your target right underneath that level, or don't put your stop loss right within that level. If you can, give yourself a little bit more safety. And for you guys that saw the Q&A session on advanced pattern formations and how we went about giving myself that range for stop projection, same type of deal, right? Where we talked about a 1 to 2 ATR zone and how to make the adjustments in between there, same type of deal. Give yourself flexibility, but obviously there has to be a limit to it. And sometimes you don't have a choice. Sometimes you're going to be in a position where you're like, man, I have to put it there because that's the only place I can get a 1-to-1. But in a situation like this where you have far more than a 1-to-1, where you're looking at risking maybe 40 to gain 80 or 40 to gain 100, you can risk 40 to gain 80 and give yourself a little bit more safety. At least in my opinion. Some people are a lot more rigid. But yeah, decent opportunity. I told you I had a lot on my radar today. Thought I was lying. Let's drop down one more time frame lower, and then we'll go down to a range bar chart. Again, intraday traders, look for that pullback. That's going to be the opportunity. Probably, look at that. Range is already loaded up. Let's see what the range bar chart gives us. Perhaps a different story. You will get a quicker move here on the range bar charts. So we have had some movement on this pair since the recording of the video, and what I'll do for you guys, speaking to Tier 1 trial and premium members, is that in this weekend's Trading Edge video, I'll give you guys an update on what my outlook is now. But what I want to talk to you guys about is this. I'm playing around with this idea of leaving a guest post position open on my YouTube channel. And very early in the thoughts, obviously, but thinking about maybe once a month allowing you guys to create content and share it on my YouTube channel. And for you guys that aren't involved in kind of the day-to-day of what we do at Tier 1 Trading, we're not just developing traders. We're not just teaching people how to be good traders. What we're doing is we're teaching people a skill, and then we're teaching them how to use that skill to develop other aspects of their life. Whether it be, create supplemental income simply from trading to create some more free time or create some just extra money to have some fun with, or whether it's using that skill of trading to grow your trading into a business where you can help others or just profit yourself. And many of our traders are looking into becoming educators, becoming podcasters, becoming YouTubers, becoming money managers, you name it. Basically, entrepreneurs, and part of entrepreneurship is developing your brand, as we talked about in the Trading Coach podcast that came out yesterday. And I think a great way to develop your brand and really start gaining authority is not only be a guest poster on a YouTube channel, either myself or Jason Greystone's, or maybe the Tier 1 Trading channel that already has authority built into it, but it also gives you a much wider reach in order to build your brand, and it gives you experience on teaching and just honing your skills. The first videos are always a little bit awkward. If you go back and watch my first one, don't do it. They're completely embarrassing. But as you get more used to it, and as you ask for feedback and read comments, you'll learn how to become a better presenter as well. Not only just speaking and looking at the camera and eliminating the ums, but also just, damn it, I did it. Also just relaying your message in a clear and concise way. So let me know what you think. Leave a message in the comment section below. Really early in the thoughts, but the idea was going through my mind this morning, and my typical style of brainstorming is machine gun style. I just fire as many ideas as possible in a certain direction. A few of them hit, we try them out. If it works, it's great. If it doesn't work, we scrap it. But I think it'd be pretty cool, not just from our viewers' perspective here on YouTube, to kind of see different ideas that different traders have, because we all do trade differently, but also for you guys looking to build your brand and really just start getting a bigger reach out there for your future purposes. So we'll see. Let me know. Until next time, plan your trade, trade your plan. I hope you guys have a great weekend. By the way, I apologize for missing the Area 51 storming. I've been training all summer for it. Forgot to set my alarm, right? Rookie mistake. But if you guys do happen to make it through without being shot, murdered, or abducted by aliens, go ahead and grab me one, bring one back. I've got some questions I'd like to ask them. So enjoy your weekend, and I'll see you guys next week.